Today we're going to talk about the 3 pillars to successful, consistent, profitable trading. Stay tuned, traders. We'll be right back. Good day, traders. Stacey Burke from Stacey Burke Trading. Just at the Perth Hockey Stadium. My son's got a state hockey training this morning and just had a run. Listening to a podcast while I had my run, and one of the key things that I tend to focus on over and over again are the 3 M's, and we talk about this in a lot of the videos. When you first come to trading, the 3 M's of trading are methodology, money management, and your mindset. And successful, long-term, consistent, profitable trading requires that you're constantly working on each one of those pillars. When we first come to trading, we think that it's seeking the entry and exit strategy, the holy grail. If we just knew where to buy and where to sell, we can make lots of money. And unfortunately, in some cases, we make a bit of money, and then because we don't have the other 2 pillars built up properly, we end up giving it back. And potentially, like in my case, you might blow up some small trading accounts. And if you refuse to sort of work on those pillars consistently, the market, as your trading evolves, as your trading improves, your methodology, obviously you narrow that down, you get better, you finally maybe find an edge, but then you find out, in my case, for example, my money management wasn't up to snuff. My position sizing, my leveraging, my understanding of the importance of taking losses, and then even evolving further and learning it's important to take losses that are consistently the same. Then it becomes imperative that your mindset is oriented, you're emotionally oriented, so that not only if you have a methodology that has a positive expectancy and you get your position sizing right, then it requires that you become a master craftsman at executing your system flawlessly. And so as you get better at executing your trading system and having the discipline and the emotional equilibrium to be oriented on the business of trading, then you may find that your edge might be declining, or that you can improve your edge. And you might find strategies that again, as you evolve, you might find better ways to pyramid into your winning trades and potentially exit your losers faster, or to take smaller losses on your losing trades. So you might identify trades that work, only move a certain distance against you before you're wrong, or before it moves into profit. So you might start to identify that if a trade moves past that stretch point, that it's high probability that it's a loser. So you might exit your losers faster. You might find, again, as your edge improves, that your ability to execute that isn't quite as good. So for example, you might not extract as much out of your winning trades as possible. So again, consistent, successful, profitable trading requires that you stay at the top of your game, and that requires that you're constantly working on those 3 M pillars. Your methodology, sharpening your edge, and that may be just, narrowing down trades to the simpler, again, 80% of traders, most traders' results come from 20% of their trades, and 80% of their losses come from, 20% of consistent, repeatable bad habits. So again, you can wipe out all your profitable trades just by engaging in bad habits over and over again. So this is where, again, you're just constantly looking and reviewing. We talk about this and why it's important to journal, why it's important to set goals every week. If you haven't done so, get the 7-step daily routine for high performance traders. Create routines that day in and day out force you to get better. Ray Dalio says he spends $100 million a year just to keep getting better at Bridgewater Capital. So the best of the best, they're bigger than any other hedge fund, but they're considered to be one of the best. And he still spends $100 million a year trying to research and develop better ways to beat the market. That's what you're up against. If you're trading the Forex markets, 70% of that is banks, hedge funds, like, big money. They're moving the markets. That's what you're competing against, algorithmic trading systems on smaller time frames. You're competing against the professionals, the best of the best, the smartest minds. They're well educated, they're well trained, they understand the game. That's your opponent. You're not buying and selling fundamental value. And if you think that fundamentals affect the markets, then go back and study the charts, and don't be lured into thinking that you'll be pretty much, if you start to go back and study the data, you'll see that the markets will tend to suck a lot of traders in one direction before they violently move in the other when data is released. And so understanding that, you'll understand why indicators pick traders up into these shorter term trends. They draw traders into supply and demand levels. They need liquidity to move the market. They need to have other people take the other sides of their trades. But again, this comes from just studying the markets, studying your methodology, looking at your ability to execute flawlessly. I talked about just learning some subtle nuances in terms of my profit taking. I had a lot of trades where I was sitting in fairly sizable profits, and then ended up giving a lot of that back. And that wasn't because I was holding on for a trend. It's because my profit targets were, I was assessing my profit target expansion too farther away. And so it's important to remember another thing: you get paid for performance. This is a performance activity, and you need to put dollars and cents in the bank. At the end of the day, this is the greatest thing about Forex trading, or any type of trading. People can have opinions. In other professions, politics, whatever it is, people think their opinions matter and they'll argue. But at the end of the day, in trading, the only thing that matters is the number at the end of the day. It's either positive or negative, or at the end of the week, or at the end of the month. There's always room for improvement. So the 3 M's, keep working on the 3 pillars, because you never arrive. Each time you work on one pillar, another pillar is going to need propping up. And so you're constantly moving between, bulletproofing your mindset, your discipline, your patience, your ability to execute flawlessly. Then you're going to be working on improving your edge, or maybe strategizing and developing a couple of other trading strategies. And then you're going to be working on your money management and protecting your capital, and maybe learning how to extract the maximum amount or more out of your winners, maybe lose less on your losers, learning how to maybe potentially pyramid into winning trades, however it is. But you're constantly looking to improve all those 3 pillars of your trading and moving in the direction of constant progress. So hopefully you got some value from today's video, traders. Keep setting goals, keep journaling your trades, taking screenshots, simplify your trading, keep getting better, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.